So in this video, I want to cover some terms that are used a lot when dealing with stocks. If you are buying or selling stocks, or if you're managing stocks, you will hear these terms a lot. And as a foundation to that, I covered in the previous video how funding works, how a company manages money, how they raise money, how they invest their own money, reinvest their money, and the raising part is where the stocks comes in. So a company typically goes through private funding. Either they fund themselves or through their family friends, or they do seed rounds or series A, series B rounds, and finally all the private funding is exhausted and there is no more private funding that can be done because the company needs huge amount of money. Then they go public. And this is where the stock concepts comes in. So Apple and Walmart I have used just for an example. These are two well-known companies. So they also went through very similar life cycle. They started as a small companies and then they became so big at one point that they needed to go out in public and ask for more money. And whoever invested in Apple, when it grew further, those people also now get benefited apart from the original investors. So when a company like Apple or Walmart wants people to invest in their company, they issue something called stocks. Now these stocks needs to be brought and sold into in a marketplace, just like when you're selling your vegetables. That you cannot just sell vegetables in the middle of the road. You have to go to a market, and in the vegetable market or in a grocery store you will sell the vegetables. So that's grocery store or vegetable market is the exchange place for vegetables. Similarly for stocks, there are organizations whose whole job is to manage the exchange of stocks. They are known as stock exchange. Every country typically has a couple of stock exchanges. So USA has New York Stock Exchange. If you go to New York, you will see a big giant bull, and there is a big building of NYSE. And another stock exchange is NASDAQ in USA. This particular wiki page basically shows you major stock exchanges in USA. So New York Stock Exchange is there. That's the major stock exchange, but NASDAQ is there as well. But another thing to know, apart from these, there are other stock exchanges, Boston Stock Exchange, Chicago. There are Miami Stock Exchange. So there are more stock exchanges where those are not the only ones, but NYSE is the most popular one, NYSE and NASDAQ. Similar to USA, all other countries have their, so India, UK, China, Japan, they have their own stock exchanges. So this Wikipedia link I'll share in the description. They have New York Stock Exchange. US has New York and NASDAQ that I mentioned. China has got Shanghai Stock Exchange. Europe has Euronext. Japan has Japan Stock Exchange. China has, apart from Shanghai, Shenzhen Stock Exchange. India has NSE, National Stock Exchange, as well as BSE, Bombay Stock Exchange. So as you can see, every country has multiple stock exchanges, and some of them are very popular. So that's when you hear stock exchange, like this is what you should understand. This is a place to buy and sell stocks. Now a public investor like me and you, we cannot just go to a stock exchange. We cannot just travel to New York to buy because it's too far from where we are living. So typically what happens is there are brokers or brokerage. Earlier there used to be people whose whole job is to we'll call those people and they will go to stock exchange and they will place the order. If we want to buy 10 shares of Apple, we will pay them the money and they will buy 10 shares of Apple, and then they will give us physical stock paper, like a stock certificate that we have the Apple stock. So that used to be the old way. Now everything happens on computer, on internet. So now we have brokerage companies. So we have companies like Fidelity, Robinhood, and many other companies are there whose whole job is to enable stock buying and selling for public investors like us. And this, again, I'll share this link. So these are some well-known brokerage account companies: E-Trade, JP Morgan, Robinhood, Webull, Charles Schwab, SoFi, Ali Invest, First Trade, Merrill Lynch, Fidelity. So you can create a brokerage account. It's very similar to bank account, but in bank account you typically save your money, but here you are investing your money. So you once you have filled it your Robinhood brokerage account, then you will, let's say you want to buy 10 stocks of Apple, then you will ask Fidelity. You can go to their website and you will place a buy order that I want to buy 10 stocks of Apple. So that buy order will go to stock exchange, and here there are many other people like us who are selling stocks. Like let's say this person is selling their stock, so that order will go to them that hey, somebody is want to buy 10 shares of Apple, and they will say yes, I have 10 shares of Apple, here you go. So they will sell their stocks immediately, and that stock will come to us. Let's say Apple is trading at $100 on that day. So I put a buy order for $100 and I got that for $100. Now let's say 1 year later somebody else wants to buy stocks of Apple, and now the Apple stock is trading at $150. So that person will pay $150, and that and let's say that person needs 500 stocks. I only have 10 stocks, so he will place 500 order stock for 500 stocks. That will come to me, but that will also go to other investors like me who are selling stocks that day. If I'm not selling stock, then it will not come to me. But if I put a sell order, like I want to sell my order, then it will come to me, and then that will be sold. The big companies that are there are millions of transactions that happens every day. So typically, as soon as you place a buy order or sell order, and as soon as the market opens, your stock will be sold immediately or bought immediately. If there are smaller stocks, then their trading might not be going that frequently, so it might take a couple of hours to find a buyer or find a seller. But that's what you will hear this another term called brokerage companies. So that's what brokerage companies mean. Now another thing that is there are, apart from brokerage companies and the companies who are issuing stocks, there are investment management companies like Vanguard, BlackRock, and there are other investment management companies, and they issue something called ETFs. ETFs are basically a bucket of stocks. So let's say I don't want to buy Apple only. I want to buy all the technology companies. So Apple, Google, Microsoft, Amazon, all of them together. So there is an ETF for that. Then let's say I don't want to buy only technology companies. I want to buy all 500 biggest companies of America. So that's also another ETF or another index called S&P 500. So these investment management companies will take a particular condition. So all technology company, and they will issue an ETF. Or they will take all 500 companies or top 50 companies, top 20 companies, top 4,000 companies. They make multiple ETFs. And this is a list of some of the biggest investment management companies. So BlackRock Financial, Vanguard, State Street, Invesco, Charles Schwab. Their whole job is to create ETFs, and those ETFs then sell just like stocks. So now you can go to the same brokerage account, and rather than buying an individual stock, you can buy an ETF. I'll do a separate video covering some of the well-known ETFs that I'm investing in. But this video, I just wanted to cover the high-level concept. Now, another thing that people typically do is to understand how the stock is doing on a particular day. So you can look at a particular stock, Apple, Walmart, and you can see that, okay, Apple is trading higher today or trading lower today. So maybe Apple opened at 100 and now it is trading at 105. Maybe Walmart opened at 100, now it is trading at 95. So Walmart is selling at a loss and Apple is selling at a profit today. And it changes every day, every hour, every minute. The stock prices keeps going up and down depending on how much demand is there for that stock. But let's say I am not interested in just knowing about Apple, Walmart. I know the top 500 companies, how collectively they are doing. So then there is thing called index. So what happens is there are indexes that are set which track the top 500, top 4,000 or those companies together. And this is a list of some of the major indexes. If you remember, I covered a few minutes back, every country have their stock exchange. Similarly, every country maintains their index. So for USA, the most popular index is S&P 500. This is the 500 top companies of USA. Second most popular is Dow Jones Industrial Average, also DJI. And then Nasdaq Composite, NYSE Composite, NYSE MX Composite. So these are USA indexes which tracks different kind of companies. Then UK. So UK has CBOE UK 100. That's the most popular index. Euronext. This tracks the euro. Then Russia index. Nikkei. This is Nikkei 225 is Japan's index. Hang Seng. This tracks. Hang Seng is I believe a China index. SSC Composite is also China index. S&P BSE Sensex. This is the most popular India's most popular index. So as you can see, every company has got their own index that are there. But these indexes you cannot buy or sell, because this is just like a measurement. So imagine if you want to buy a plant, and that plant is a meter long, and 10 days later it is 1.5 meter. So that 1 meter, 1.5 meter, that's a measurement. So similarly, indexes are measurement on how the stock exchange is doing or stock market is doing. But you cannot literally buy these indexes. What you can buy is an ETF, which is derived from that index. So Vanguard has created an index which is tracking S&P 500. So if you want to invest in S&P 500 companies, you just buy that ETF, which is tracking that index. And when I cover the ETFs, I'll cover that part. So that's basically your what do you mean by indexes? Let me see. One more thing is there, like typically when I'm as an investor managing buying stocks, I need to buy on a regular basis and sell on a regular basis, and sometimes I'm busy on my own life. I don't have time to do this buying and selling activity. So in last couple of years, there is a new industry new thing that is coming is robo investors. Robo investors are basically machine-based investing, where you define certain rules. Let's say you say that I want to invest 70% stocks in US stocks, 70% of my money in US stocks, and 30% of my money in US bonds. Bonds I will cover in a later video, but you want to have 70% stock, 30% bonds. In older time, you have to literally buy 70% stocks and 30% bonds. Now let's say 6 months later, stocks prices are trending higher. So which means your portfolio is now having more stocks because their price has gone up. So now you have to rebalance it on your own. So that all you have to do it on your own. But in today's time, you just put that rule in these robo investors, and there are two that at least I am aware, Betterment and Wealthfront. Apart from these robo investors, even the traditional brokerage companies, Fidelity and other Charles Schwab, they are also offering robo investor these days. So you can use any robo investor, and you can define a rule that this is how I want to maintain my portfolio, and that robo investor will take care of balancing, investing, selling, everything. So that basically frees up your time. So that's another concept that I wanted to be aware. Another thing to be to know is when you buy a stock, you are paying some commission. So typically, brokerage would want a commission. When you used to buy in older times, the brokerage used to have a lot of commission, 10%, 20% commission. But now there is so much competition that these brokerage companies do not really ask for any commission. You can do zero commission trading for most on these firms. So when you're buying $100, you don't have to pay commission to Robinhood, Fidelity, and they make their money in a different way, which again I can cover in a different video. So buying an individual stock, you're not paying any commission is the bottom main thing. However, if you're buying an ETF, these companies has created those ETFs, so they do want some commission. By the way, apart from ETFs, earlier there used to be a thing called mutual funds. So maybe I should cover that quickly over here. So mutual fund earlier used to be people who will track, let's say 10 stocks or 20 stocks, and they will, so you can buy those mutual funds as well. And the commission on the mutual funds would be higher, 5%, 10%, or maybe lower as well, 1%, 2%. So it depends on the mutual funds. But mutual funds used to be managed by a human, but ETFs are typically you're just tracking an index. So there is less human management, or there's less management basically involved. You can just track an index. So ETFs commission is typically low. So that's one of the biggest advantage investing in ETFs, that you're not paying any commission, or you're paying very little. This is known as expense ratio. So you will see here this term as well, expense ratio. So the expense ratio on ETFs is like 0.03% or 0.06%, which 0.03% means $3 for every $10,000 invested, which is very, very low. Earlier it used to be, let's say, 10% commission. So for every $100 it will be $10. For every $10,000 it will be $100. Sorry, it will be $1,000 for every $100,000. So as you can see, it's a lot of money that earlier these companies will take, but ETFs is very, very less. So that is another reason many people these days invest in ETFs, which is 0.03%, 0.04% worth of commission is needed. If you use robo investors, they would want a little bit extra because they are managing investment for you. So typically, like they charge around 0.25%. So that's a disadvantage if you are using robo investor, that you have to give a little bit extra commission to betterment and wealth front. But the advantage is that you are saving your time, like they are managing your investment, but they are taking 0.25%. So I already this video has gone 17 minutes, so I'll stop over here. But I think I covered the main concepts around stock market. So what is the stock market? How do buying and selling happens? What is a stock exchange? What is a stock index? What is a brokerage company? What is an investment management company? What is a robo investing company? So all of those things, hopefully you are aware now. So I will dive deep further on different topics related to stock market in my next video. Thank you. Bye.